The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. This is the Friday 20th of July edition. And two fabulous hours just went by. Steve Rose kicked it off as always. And then we had Tom O'Brien and Daryl join them. And that was really interesting because trading the Nadex, he came up with some really great ideas. And, you know, this is all about ideas here at TFNN. This is an educational force and becoming a powerhouse, I believe, in the way programs are set up. You've got from 9 o'clock till 6 o'clock. Tom O'Brien wraps it up 4 o'clock till 6. After my show today, you've got Nico DeHaan, talks about health. We've got Dave White. You've got Ken Shreve. I mean, this is really stupendous. So right now I've got to show the ChapmanWave technique. You remember Friday is the day that we get a little bit more involved in the ChapmanWave itself. And I'm just showing this new IPO Palo Alto Networks Inc. I'm showing the ChapmanWave, the 1 minute chart. It came out at $55.10. Usually you see round numbers. No round numbers yet. So it opens at $55.10. Let me just drink a sip of tea. Very nice. That was a recommendation from one of our dinners earlier on, a sip of tea. And then it went to 62.07 and a low of 55. Was that? Let me just double check. And a low of 53.50. So now it's attempting to have its first real ChapmanWave buy mode. I'm using a 1 minute chart because it's an IPO, and the ChapmanWave, it doesn't matter whether you're looking at a 1 minute chart. I'll show you some monthly charts. It doesn't matter. It hit the 200 period exponential moving average, bounced off with the stochastic. You'll see if you're looking at Tiger TV, especially got my little there. I'm going to open it up a little. I can't open it up too wide because I don't want it to get squashed. There you are. So you've got you tested twice the 200 period exponential moving average. See that fast moving average of the MACD? It's turning positive. See the little white lines, those vertical lines? Those are the histogram. That's the combination of the 26 and 12 that gives you this 9 period differential. And now look what's happened. The MACD the stochastic went from under 20% to over 20%. It's at 86% now. There should be, I say should, you just never know for sure, a leg D up about 56.75. That's the way the ChapmanWave works. You start to get good signals. You find the lowest low bar, most identifier low bar. You see a potential for a move to at least 4 peaks. All right, that's that. We'll come back to in a little while. Now, let me just show you the futures here. This is what I show my subscribers every day. Let me just show you what I do. I think this is it. Yeah, okay, I'm going to go to the chart, which is the future. There it is. Okay, that's what I send my subscribers every single morning. Just a huge amount of information. They don't even have to look at all that information. In fact, I wrap it up in just 1 or 2 or 3 lines, brief lines in my Trader's Corner, if people don't have enough time, because that goes out by 8:35, 8:36 every morning Eastern Time. It's the final thing. But from 6:30 in the morning, I'm busy sending out charts to my site. And this is what I always show. I show the E-mini futures. It's the 120-minute chart. I usually show it with the 10-minute chart. And I show all the different techniques. That's really what it's all about. It is about, I want to educate my subscribers. I want them to be able to garner information. I mean, when I met Tom O'Brien the very first time live, I had my computer there. I sat with him in his New Hampshire office. I put it on. I had charts up. And I said, I'm just going to keep this running, and we'll talk as we talk about, what you do at TFNN. You can see what I do. We'll move. And then I waited for for a leg F. That's the 6th highest peak. And then I said to him, okay, within 2 minutes we should get a really sharp sell-off. And that sharp sell-off just came. It went to peak F, and then it plummeted down. And he said, wow, I want you to be part of TFN. And I said, if it's educational, my purpose has always been to educate. I love that. And So I've been here almost 8 years, I think it is. So education is what it's all about. And that's what I want my subscribers to be able to see. So in fact, what we've got is from... something that I always talk about is that you can go from the left side, in this case, a top. That was the May, I think it was the 7th. Oh, let me see if I can get it. Yeah, the 5th of July. Sorry, no. Yes, the 5th of July. That was the high. And what happened is the S&P E-minis went from 1375, round number, peak D in the ChapmanWave, that's always very important, and it came down to the low of about the 12th, I think it was, 12th, 13th of July at 1319.75. And now look what it's done. You know, we always talk about the expression on Wall Street always is that you go down much sharper than you go up. No one can disagree with that, but I always say that's only if you're in crash mode. I'll show you a chart that represents that just in a moment. Otherwise, you go in a normal move, sequentially down, a stair-step way down, and a stair-step way to the upside. Now, look what happened. From the low at 1319.75, you see the red line here if you're looking at Tiger TV? Well, look at the right side. There's a green line, and that green line matches to the exact 120-minute hour. I don't even know how many bars that is. Let's say 6 times 30. Let's just say 180 bars. Can you believe? Exactly to the bar, it went to 1376, $1 higher than the 1375 high. That's not my point here. My point here is to show you that there was an equidistant move on the way up. In fact, if you want to look at the spikes to the downside, the waterfall cascades, there were an equal amount of spikes to the upside. So it is the crash phase where it's absolutely true that when you come down way quicker. You can, in fact, we'll see in a certain instance, come down in 3 hours. It's probably not even that. No, it's in 1 hour of trading, but it's overnight, and take out months of hard-earned gains on the upside. So, now let's look at this. You've got this test, and now what's happened, you've taken a lot. But I always say when you take a lot of bars to come down and not use very much price, then you've got to expect that there could be a bounce. If that bounce succeeds, you can go back to the top. Then if that bounce fails and you take out that low, just as you did right here, so far we're matching quite well, the sequence of events from the 5th, 6th, and 7th, and 8th of July, well, up to the 7th, and then it plummeted down below the 1357 rectangle support. So we're going to be looking at the level now, and I've said that 1359 is probably the level that you got to watch in the E-minis. You take that out decisively, then it's a very quick trip down to the 200 period, 1348 level. But wait a minute, very quick. We've already, in time, pretty much matched the way up. Isn't that fascinating? So one's impression can be very different to the chart formation that is formed. Okay, enough with that. Now, what I'd like to do is to also say, I featured another chart. I was asked to do this. I normally don't really want to do it because, you know, this is private. It's between me and my subscribers, or as Steve likes to call subscribers, clients, and I think it's very important. I love to treat my subscribers as if they were clients and give them an incredible amount of information and time. There was a chart that we were looking at. I've been talking about this for I don't know how long now. And that is, I'm showing it in white because I wanted to send it out to my subscribers today as a printable chart, one that they could look at and refer back to because it has all the techniques, but it's just perhaps for some people, or certainly it's much cheaper to print out, although after the move down, they should be able to afford to use a couple of cartons of black ink. So this is CMG, which is Chipotle Mexican Grill. It was trading at 344.25. No, it was trading at 300, and yesterday it was trading at around about 400. At the close, it was at about 402, I think it was, or 401. Now, what's really important about this chart is look at the techniques that are involved here. You see this red line? And that red line is, in fact, the 9-period exponential moving average. It once it broke above that in 2009, I think it was March or so, June, it never once, other than touching it, it never once closed under it. That is spectacular action. Look at the weekly chart. It goes up, and then it goes to 442.40 peak E in the Chapman wave in a beautiful up channel, comes down, tests that, and then I said last week, I was talking about it on there, I said, it's broken that up channel, that's not a good sign. So there are other techniques that I like to use. For instance, in the monthly chart, for a monthly chart to do this, and so many charts are doing it, to make it a round number, either at the open, the high, or the close, or the low, it's, for me, very important. It's a telling sign. Well, Chipotle opened at 417 4 months ago in April, had a 442.40 high, made a doji candle, and then broke below it, but only closed under it last month, right at that 9-period exponential moving average, which was a tip-off for me that the MACD could finally start turning down, and the stochastic, which was way up in the 96 area, could start to pull back. Still no real sign, because that's a monthly, and July still hasn't finished. Then CMG, which closed at 403.86 yesterday, says, I'm doing very well. What are you looking at in the price? And then I look and I say, the MACD, the beta, the fast-moving average above the slow-moving average is very wide. When I see that, it's just a heads up that that directional trend has got momentum. It is, you've got torque. That is, you've gone from first gear where you pull off. You know, every car starts off in a first gear, unless it's got this CV, unless it's got this automatic transmission that has no gearbox because it's just a rotating pulley system. So that initial kickoff is what's really important. That's what I get from the stochastic, and the stochastic was already breaking down. But the beta confirmed the momentum to the downside. But the price was still holding. Then you go to the daily chart, and not only that, you had a peak E top, and then a pullback with a red candle, no big deal, but you had fractionally lower highs. You went from 442.40 to the next bar, 441.78 high. Remember I said I've been spending about 8 months. I love to spend a lot of time on my techniques, and that technique said, if you have two bars, especially in a monthly, but it can happen in a weekly, it's even starting to happen in dailies, have a fractionally different lower. It can be slightly high, but most of the time it's a fractionally lower high bar, which is not even perceptible. Most people wouldn't even notice it. Be careful, because that could start, especially a D, E, or F in the Chapman wave, that could trigger a very sharp sell signal. Well, you got it, 442.40, and the next bar was just 68.69 cents or something like that, lower. But here's the thing. I said, wait a minute. This week we've seen the stochastic turn back up. It didn't even get under 20%. Well, that is negated by the power of the tide. If you understand, and this is the reason why I was like a bulldog, just sitting, holding these shorts that we've got. We've got 4 shorts, I think 4 shorts, maybe it's 5. And just sitting there, because I said that the tide has changed. And now look at the daily. Went to peak E, leg E yesterday, and here's the result. So look at it right now as we go to a break. 877-927-6648. I'll be right back as we go out to the break with my chart right there. Chipotle.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
Many of our new listeners have heard about The Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to archives of those charts. You can test drive The Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on The Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
All right, folks, let's just wrap that up because we've got callers on the line and we've got questions in the den, so let's just do this. So Chipotle is trading right now at 312, down 91.44, and we've been shorted a number of times. The core position was short from 414.50, and I said for subscribers that it's absolutely imperative. You need to take profits right at the opening, which is around about 327 to 328. The reason being, even though it could have gone down further, it is so rare that stocks gap after the report, gap down, and then triple the gap overnight. And I feel very strongly that there'll be another opportunity for us to short the stock if we want to. And you've just got to take those gains because anything can happen. And if you wanted to keep a couple of shares, that's fine. It's gone down to a low today of 307. So 414 down to 307. And that was the last opportunity to short. That, that's telling us something. And what I've been talking about for a while is that the restaurant group, the auto truck part group, maybe not all the stocks, but certainly we're short one particular one, and it's been going down every time the market rallies. It just fails to rally now. It was a leader for 3 years. And then we've also got an apparel group, which was also a leader for 10 years. Actually, it's one of the best performing stocks. Now I think the tide has turned. And that says to me we've got to be very careful right here. We've got to be careful. sector, and one of the reasons why today's the first time that we've actually got a position in an index ETF is because I felt that the choppiness, and even now I'm going to talk about that in a moment when we got our callers online, when we go there, the choppiness says to me that the money is going to be made by selecting very carefully the long side. You don't be afraid to go long. There are certain sectors that are still doing very well, and the short side. And that's very important. I've got a signal, but I think this is the start of a signal. I haven't got a confirmation yet that this is right now we're looking at in the daily of the Dow. This is the other thing that I show subscribers. I show this every single day. You look right here, you would see it. I don't know what to go to. But this is a peak E in the 120-minute chart. But I need to talk about the VIX, and we'll get to that with our next caller. But look, even though it's options expiration, I still have to account for this 3.79 in the volatility in the short-term trading index. That is really important. So I need to. I hope, Lorna, I hope you got your J.P. Morgan during the break. I did J.P. Morgan. I'll try to get back to that. But let's go to our callers right now. We've got Ari in Arcadia. Hi, Ari. How are you?
I'm doing pretty well, Basil.
Good.
Yeah, I'm looking in the SPY, and it's really for me, it's extremely complex right now. Usually the ChapmanWave is non-complex, but this guy is really, really complex. Now, the easy one is the weekly. So if we could start looking at the weekly.
Okay, if you don't mind, let me just tell folks what we're listening. Folks, we're looking at the SPICE, the S&P Select Spider. It trades very much with the S&P 500 index. I say very much because sometimes there's a little bit of a discrepancy. I just wanted to make something clear, Ari, from the 127.14 low on June the 4th, was that? Let me just, June the 4th, June the 4th, it made peak A, B, C at 136.25, pulled back to the 200-period moving average, shot up to leg D at 137.51, pulled back again, made the ChapmanWave declining cone, that falling axe pattern that I talk about, and then ran up yesterday to a doji high of 138.18, which at this point I have no choice but to call it E and to wait to see if there's any evidence of further gains. I want you to clear that up because to me, so far, this has been really clear that I have no choice but to extend the buy mode that started at 127.14 to leg E/B, meaning, yep, it could start at B, but right at this moment, I wanted to call it E because the stochastic is lower than the MACD, lower than it was at the peak D at 137.51. Anyone's looking at Tiger TV, you'll see that. And then what's even more important is that you've got, it's above the 9-period exponential moving average. So I'm considering that it's a continuation pattern right for now. And I'm going to add something else because I need to speak about it because it's so important. The volatility index, and I've made a huge big deal about the volatility index being under 20 should be a positive for the market. This is the thing that has held me back. And although I took a jab today, I would not be surprised if the position in my ETF is not going to hold, and I'll explain why. Because this is leg A up in the VIX, but the VIX is only at 16.48. So I wanted to cover that just to explain to folks how we're leading in to the weekly chart, because absolutely it's imperative that we go to the middle chart, which is daily, weekly, monthly. The middle one is the weekly, leg B up, but it's a gray B. I'll be right back. Basil Chapman, 877-927-6648, Dow's down 82.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to tfnn.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks, we're back, and we're online right now with Ari in Arcadia and Mike in Long Island, waiting in line there. I just wanted to check something out. I don't think did I give all the numbers? No, I didn't. So let me just do that because we're in the middle of a conversation about the SPY, but I think it's important that we get to know what's going on. The Dow's down 99 at 12,844. The S&P is down 10.5 at 1365. The Comp Index is down 27 at 2938. You've got gold. Gold is right now, I'm a little behind, is up 8 at 1589. Silver is down a tad, 06 at 2716. High-grade copper is at 3.45. It's just hanging in there, but it's not really, it's not a big improvement. Dollar is up at 83.42, up 53 cents. Crude oil is down at 91.61. What am I missing? And of course, I'm missing a most important thing, which are bonds are up 26.30 seconds at 151 and 13.30 seconds. And the volatility index, as I said, is not skyrocketing. It's up, but it's really not pushing very high, which leads me straight back to Ari. And Ari, in the weekly chart, what we had, you remember, we had discussed that there was a very unusual pattern in the ChapmanWave, which is actually far less unusual. In fact, in my book, that I call it a book, I don't know if it's more like a notebook, but it is really full because it has every single thing you could ever find in the Chapman wave. And this is the C1, C2 double top that just fractionally misses. In other words, folks, the Chapman wave, you look for the lowest, most identifiable low bar. That's on the week of the 7th of October at 107.43. The first peak is peak A at 129.42 on the week of the 28th of October. Pulls back to the 9-period moving average. Starts a brand new. If it has an actually it has what I call a gray A, a sub A underneath there. But they both come together and it comes to a very sharp B that takes you in a left side, right side price time match all the way past the 137.18 high of May the 6th of 2011. It goes right to 138.19 for peak B, pulls back to the line, and then goes to peak C at, I should have typed it in, 142.21. I'll type it in now. 142.21. Pulls back just a little bit underneath the 9-period moving average for the first time since it broke out in December of 2011. And what happens? It tries to make a new high, and it just misses because it goes to 141.66. That's 80 cents. 80 cents is nothing in the S&P. 141.66, I think I said. So now what we've got is a pattern that I call C1 and C2, meaning that everything about it, the characteristic of the MACD, having this little right shoulder failure, the characteristic of the stochastic, way weaker, underneath 80% by the time it tries for that retracement rally, says that essentially it's like a peak D, but it didn't make it, so I call it C1, C2. I even have patterns that are C1, C2, C3. Amazing how these things work. Pulls back as if it was a peak D. MACD turns around, goes much lower. Stochastic goes all the way underneath 20%. And now look what's happened. For the last 4 weeks, the S&P has been above the 9-period exponential moving average. That's really what Ari is saying. What is going to happen next? Correct, Ari?
That's correct.
Okay. So what it is underneath it now I've got a sub A, B. I call it the gray A and B because my letters are usually yellow unless I'm doing my white background chart. So that says until it decisively clears 142.21, and that has to close above it, probably has to close it 2 out of 3 weeks, I have to call it a possible parallel wave count because this B, if it pulls back and then in leg C, it powers through that 142.21, leg D is going to be really strong. But what do you need for that? You need the stochastic to be rallying sharply. You need the MACD to be positive, and neither of them are. So here, this is my rendition of what we've got. If I go to the monthly chart, there's nothing wrong yet, but the stochastic starting to fail and the on-balance volume is decisively negative so far, but the MACD is holding very well. So I have to leave the chart until the last day of July. Let's go back to the daily chart. The daily chart says we've made a potential peak E with a doji top yesterday. Stochastics at 86%. That's very good. The MACD's still very strong. It's above the 9-period moving average of 136.21. Hey, let's go to the 120-minute chart. Maybe that's going to help us. Well, once again, we've got a left side, right side. It's not a cup. It's actually a V-shaped pattern. Usually V-shaped patterns can be much stronger than cup formations if they decisively take out the left side high. Why? They haven't taken all their time to make that curve to the bottom and the curve to the top. It's a power move down and a power move up, except for one thing. We've gone to peak E. You've had 4 doji candles in the last 4 candles. The stochastics now at 79% under the 80% level. The MACD is just about to cross positive. So you have no position right now in the SPY, correct?
No, I don't have any.
Okay. Are you wanting to take a position but you're not sure, or you just want using it as a guide?
Well, I'm using it as a guide.
Okay. If you're using it as a guide, this is all I can say to you. Now, I'm going to take a moment, and I hope Mike is able to wait, but this is really pertinent. I have to go to the VIX index, because I've made it really clear that as long as the VIX is under 20, there should be buying pressure from the volatility index in the teens. Yet we've started to see a decline here in the S&P of 10 points. And my big question for subscribers every day has been, wait a minute, with the VIX index close to where it was at record levels down at the 16 area, that goes back historically. And let me just show everyone, if you're looking at Tiger TV, look at this. Historically, every time that the volatility index has gone back into the teens, especially under 19, there's been a fabulous move in the indexes. And I said, something's wrong with this picture. Is this that rotational sector where there's so many sectors now starting to weaken that you've got fewer and fewer Dow stocks that are able to hold and S&P 500 stocks that are able to hold? I don't know the answer, but this is my background thinking, that the volatility index is still telling me that the indexes could be within a trading range a little while longer. That's number one. Number two, sector rotation and sector identification is absolutely imperative here to make some real money. Number three, gold and the metals are in a trading range, and I believe gold will be making lower highs and lower lows. So now, what is the trade? And I'm going to say to you, because you have no trade on at this particular moment, I would say to you, you could take a little nibble on the SDS, which is the 200% short to SPY, as a kind of a security if you have some long positions, more to counterbalance there. If you have no position at all right now, I have to just go to the TBT. The TBT is once again, the TLT. The TLT is once again holding beautifully in this high-level consolidation. If the TLT takes out 130.61, I think that's going to once again take money from the stock market and put it back into bonds. So my recommendation is this. If you want to take a small position in the SDS, that's short the SPY, 200% short the SPY. It doesn't have to be that, but it's kind of low price. It means that you're in for not that much money. Your percentage loss will be the same no matter what it is if you're wrong. But I believe that the pressure right now is going to be on the market proving that it's able to take out the most recent highs in all the different indexes. And that's a lot of pressure. The best we might see is a trading range, a high-level consolidation with certain stocks, maybe an IBM also having a nice bounce, etc. But I'm a little concerned when I look at the overall picture that money has been flowing. Bonds have not pulled back at all. They're holding very well. So I'm going to, for the moment, exclude the volatility index, because all I can say is that if it does get to 20, that would be at least another 300 to 400 points down in the Dow before it actually gets to 20 probably. And then if it holds in the 20, there's even, so maybe we're looking at a sideways consolidation, that the buying pressure is somehow still there, and that just as a security measure, if you want to get the SDS, which is trading at about 1543 right now, you could give it a 20, 25, 30%, 35% stop, and just a small position. That's how it's standing. Now, if the Dow closes below 12,800 today, and the S&P closes below 1360, it's at 1366 now, then your SDS, I would actually increase the SDS at the close today. So that's the way I would play it. I will have a great deal more information when I get weekly closes all around at Friday, today at 4 o'clock. Oh, and I will be doing Ken Shreve's show at 3 to 4. I'll be discussing it again later on because we'll be close to the end of the day and the end of the week. So that's the way I would consider it. Sector-wise, there is still some residual strength in some of the indices, but I'm starting to see sector-by-sector weakness. So I hope that helps you and gives you some sense, because I can tell you by Monday, if we break down and we close down 135 to 140 points in the Dow, that I would be increasing the SDS position as we go into the close, if that's the case. Hope that helps you.
Thank you.
Thank you very much. Let's go to Mike in Long Island, waiting patiently. Hi, Mike. How are you?
Great, Basil. First, kudos on Chipotle. Outstanding work. It was truly a masterpiece.
Oh, thank you very much. I do appreciate that. We spend a lot of time, and as I say, I focus like whatever dog it is that just grabs you and holds on, because on those short positions that we've been doing it in many of the short positions that we have, and it's been very tough to do because the market itself, as you've seen, you've had some nice moves to the upside in the indexes. So thank you very much. You'd like to look at?
Under Armour, UA.
Okay. Under Armour UA, folks, is an apparel company. It's mostly sportswear, is it? I think so.
That athletic wear.
Athletic, that's it. Let me just type that in. I think I had it. I lost so many charts, I didn't even want to explain what's going on. Athletic wear. And I don't know if it's, I can blame my software package, or if I did something wrong, but it's just been frustrating. But you know what? Going through these charts the second time, redoing them, has really been... that's the one thing that I really don't mind. I don't mind redoing charts because I found a couple of mistakes that were very important in my lettering last night and this morning while I was going through them, which made a difference. So, UA is Under Armour, is trading at 49.04, down $1.49. Here's that exact same thing. Remember Chipotle, and then my engineer told me exactly how to pronounce it. Chipotle. Whatever it is. That 9-period exponential moving average. Look how many others are doing that. You've got, here's one. Whole Foods Market. Whole Foods Market is the same pattern. Going to a peak E in the monthly chart. At 90, it had a higher. It went to 97.25 in June, and then a fractionally lower high this month, 96.90, pulling back. If it closes under the 81.70 level in July, that's the first time it's broken underneath the 9 EMA. And UA, which is the stock we're talking about right now, same chart. The great charts have the same pattern, but this one's holding way better. But the MACD, if you look at the chart, if you're looking at my if you're looking at the Tiger TV, you will see that the MACD is holding very well and stochastic still at 87%. So it hasn't given the signal yet in the monthly that it's about to croak. Wait a minute. Let's go to the weekly chart. And you have a short position?
I just put one on today. The weekly, I'm seeing divergence there, and they report earnings, on Tuesday, I believe.
Oh, Tuesday. Wonderful. They report earnings on Tuesday? Okay. Because what we're looking at here, where is Rick from British Columbia? That is very similar to a head and shoulders pattern, but you cannot rule out the oval formation that I always talk about. And that oval formation says, it's a very big oval formation. And if that's the case, there might be an upside surprise. If I was to guess right now, just based on everything I'm looking at, I would not be surprised if, regardless of UA, Under Armour gives a really good report.
Right.
Is it in the morning or the afternoon? I think they come out at 4 o'clock, after 4 o'clock, right?
Yeah, I believe so.
Okay. It would not surprise me if they bounced after the market closes, they bounced up, but the following day, Wednesday, they give back all those gains and they start to slide. And I'll explain why. And that's just a guess right now. I'm going to have to do a lot more work, and I probably will do it for subscribers on Monday. We might take a position in this. I'm not sure yet. Why? Because the pattern that we're looking at right now, if this weekly bar, had not closed above or gone above the 9-period of moving average of 48.34, if in fact it was weaker right now, I would absolutely have no hesitation because the stochastic would not be turning up. But from everything I'm looking at, you see the way the weakness when you Under Armour went to the high on the week of the 20th at 51.43. You see the stochastic was already starting to fall, but the MACD was strong. Now the stochastic on this last move to the new high, I've called the G, at 53.93 on the week of the 22nd, is way weaker in the MACD and the stochastic, so the technicals are starting to fail. Hold on, we'll be right back and we'll go through it in detail.
Put the power of the ChapmanWave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's ChapmanWave methodology for several years now. His ChapmanWave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the ChapmanWave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his ChapmanWave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit tfnn.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Time is the great equalizer of all mankind. Time doesn't care about winners or losers, who succeeds or fails. Time only cares that you played the game. Question, are you playing the money game? Is your money working as hard for you as you are for it? I'm Steve Rhodes, author of Mastering Probability, a daily trading and investment newsletter service, and we're celebrating our 1-year anniversary. In year 1, we generated a 30% profit. Plus, I provided 26 hours of live coaching to my clients. My daily newsletter service is available by 8 a.m. each day and covers the stock, futures, currency, and commodity markets, along with all the current patterns that you can trade. Each newsletter is packed with education, and it's yours for as little as $3 per day. And for the next 30 days, you can try it risk-free. Click on my name, Steve Rhodes, on the homepage of TFNN.com and begin your journey to great wealth today. If you're waiting for a better tomorrow, remember this. Today's tomorrow will soon be yesterday, and your clock is ticking. Mastering Probability. Now is your time.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
It's Basil Chapman, final segment of the show, though. I'll be doing another hour, 3 o'clock to 4, Ken Shreve's hour. It'll be my pleasure to be here. So we're on with Mike in Long Island looking at UA, which is Under Armour. So, Mike, if the earnings come out Tuesday, you know what I'm going to suggest? I would suggest you don't have any position right at this moment, or you do?
A very small one.
Okay, you have a small position. I would stay with a small position. Let's do it together on Monday. I'm going to do a little work on this over the weekend because as it stands right now, my bias is to say, great, have a short position and have 3 positions. One is right here. One is into the gap somewhere around 51.81. And then just have an outside one which says the old high was 53.93. I'd have one at 53, and all 3 would be small positions. And the reason being is that's my thinking. I wouldn't do that right now because I need to see how it closes. But on Monday I'll have a much better idea, because where it closes today is going to be really important for the candle, or the weekly candle. If it closes underneath 48.70 by the end of the day, I will have enough evidence to be able to lean my bias way more to the downside. I believe it's going down, but you need to time it perfectly. So why don't you hold on? I wouldn't do anything extra right now. Let's talk again Monday morning, okay?
Yep, good idea.
Thank you very much. Okay, folks, let's go through this, because I had a question, and I want to deal with it not peripherally. I want to deal with it in context. It's JP Morgan. JP Morgan chart the weekly chart looks like that Eiffel Tower, straight from 27.85 up to 46.49 and then back down again. Weekly chart says, that H pattern is very likely if it closes underneath 33.30 in the next 2-3 days, not even on a weekly basis. But if it closes under 33.30, then the daily chart says, not good at all, because that whole consolidation phase is now a tremendous resistance, and the MACD and stochastic are very poor. That takes me to the XLF. Well, we want the financials to be acting well. Financials are holding right at 14.44, the XLF, and it's right on the support. If the XLF on Monday starts to take out, any time in the next week, if it takes out 14.25, that's really poor. But what if GE, which is now partly consider it as if it's a financial, has turned around so nicely from the low of 19.43 today, 19.45, and is trading at 20.08. Is this telling us something? That's the mixed picture that I was talking about earlier on. That the volatility index is too low for where the Dow and the S&P are right now. They should be higher. So is it wheel spinning that you've got the buying but it's not going anywhere? Well, the sector rotation is absolutely imperative to watch, because let's go through my 4 Dow Horsemen. GE holding really well, great day today, up 1.39% when the Dow is down 0.66%. Let's go to IBM. IBM had a fabulous day yesterday, giving back some of it today, but just a little bit. So it's holding well, and that was on earnings. You got Triple M, which was doing great. Well, we missed a great option trade there. And now it's making, with a doji, a potential peak F/C. So it's held beautifully. The weekly chart still looks good within a trading range, but it's not bad. It's not looking poor. And you've got UTX, which suddenly came to alive when it was doing poorly, but it's still way in this trading range. So there's that mixed picture that I'm looking at. Let me make it real clear. IBM Weekly, I had a question of the den. Could I show it? Sure can. Here's IBM Weekly. The IBM Weekly just saved the day yesterday with that earnings report, because it went to a trough C, but the MACD, you see the stochastic's got a positive divergence, but the MACD is still poor. So I'm saying that right now I've got 197 to 199s as really strong resistance with IBM. It's that monthly chart in July. If it closes for the first time under the 9 EMA, that is not going to be good. So you've got Nico Rohan coming up. I'll be back at 3 o'clock today, and I appreciate it. So let's just go through this again. Dow closes towards the low of the day, underneath 12,800. That isn't so good for coming up into next week. And if it saves the day by getting to the 12,890s, hey, you saved the day. But what can I say? The charts are saying be careful here.